Portfolio Builder members, welcome to our July 24th update. Right now I'm listening to the Mueller testimony and the market doesn't seem to care. We had a very nice win on today's trade alert that we are closing and are going for even more aggressive trade today. So let's just sum up what happened and then we'll go into today's new trade. So the SPY ETF went from $297.29 up to $300 for a $2.71 gain on the underlying asset. The call option that we sold started off with a 34-cent credit, but we had to pay $1.06 to close that out for a 72-cent loss. And our put option, that's our absolute atomic bomb-proof aspect of the trading strategy. Market could drop $10, $20, $30 overnight. We wouldn't give a damn because we own a put option at all times. This allows us to be hands-free and only have to trade at the designated time with no fear of any kind of substantial loss. Overall, we made a profit of $1.60 per share. Now, this is an abnormally high return that we've been having consistently this year, and has allowed us to outperform our goal of a safe 1% a month. Now that doesn't mean we never lose, but what we really are more keen on is not losing a lot. I don't mind having a few small losses here and there, but what we really can't afford is waking up and having lost thousands or tens of thousands of dollars. So this is a 53 basis point return. If we were to do this 156 times a year, and I don't think we will, but if we did, that compounds to $68,000. That's a 128% annualized return. Now again, we're outperforming our 1% a month promise, but I'm not by any stretch trying to deliver 10% returns per month, which is what this would indicate. So I just want you to be crystal clear. Our goal remains a super safe 1% per month with the focus on never having a big loss. So our current setup in today's trade alert is as such. This is the new trade alert. In a moment, I'll go over how to close out last trade alert from Monday. But in this trade alert, we're selling a out-of-the-money call option, which is the 303 call, and then we're buying the 297 put. So we stand to either make $300 or lose $300 in the worst and best case scenario. Now, if the market goes down a little bit, realize the call option we sold takes a little bit of that pain off. And as we get closer to the 297.50 mark, the put option we're buying goes up and up in value. So even if the market were to go down between now and Friday, we would lose a lot less than everyone else. Now, on the flip side of the coin, if the SPY were to jump more than $3, which it rarely does in a 48-hour period, we might make a little bit less than everyone else as well. So in general, this is still a very protected trade. If something goes wrong, namely the Facebook earnings or Amazon earnings coming out below expectations, that could create a sell-off. And I don't mind if we lose $300 a contract. What I don't want to do is lose $600 or $900 or $1,200 or $2,000 per 100 shares of SPY because we were too foolish not to own the put option. So again, this is our current trade alert. Step one, we have to buy to close the July 24th, 2019 299 call. And you won't be able to sell your put option, just let it expire worthless. You can see in the summary, if the put option is only worth a penny, you probably won't be able to sell it. So just let that expire worthless. It's no big deal. You don't have to worry about that. Okay, so step one is to get out of last week's trade. Step two is to sell to open the July 26, 2019 303 call. It's only 11 cents. And then to buy to open the July 26, 2019 297 put, which is 20 cents. We're paying a debit of 9 cents to go into this trade, and we can realize a profit of up to $300 a contract from this trade alert. So if we look at the options market, I was actually able to guess where Wall Street was before I looked at the option chain. I set this up thinking this was a good bet, and then went to confirm where Wall Street was putting their money, and sure enough, There's the biggest open interest sitting at the 303 strike for Friday. That's where a lot of big money SPY holders will have to sell their shares to the call option gamblers if we do get a rise that high. And then on the other hand, the put option writers are feeling safe about writing at the 297 mark. So I think we have a good caller set up to profit from some positive earnings in the next 2 days. So we got Facebook after the market close, and I believe Amazon tomorrow after the market closes. Meanwhile, everybody's getting stoked for next Tuesday, where Powell is expected to start lowering rates and talking about how we need to do QE before a recession starts instead of after it starts. So that's kind of a corner they've put themselves into. During the last two financial crises, we had to drop the rates by 5%, and we had climbed the rates up high enough to do that. This time, we only made it up to 2.5%, and they're already getting ready to lower rates. So I think their strategy now is to start aggressively buying bonds, keep the yields on bonds super low, and help support the equity market by doing so. Now, if they can do this long enough and get the global growth situation fixed, then they'll be in a situation to have prevented a recession and potentially be able to raise rates as soon as things kind of clear up with the U.S.-China trade war. Now, questionable thing is, will that really happen? We have our trade representatives flying out to China on Monday, so there's another swoop of potentially good news that could come into the markets. And now that Trump presumably has given up on raising tariffs before the next election cycle, we might have a blow-off top in stocks. So again, that's questionable because any bad news in earnings or between the U.S.-China trade war would certainly cause the market to tank. So from that perspective, that's why we want to have these put options right now. We're at all-time highs. The global growth story is collapsing around the world. U.S. is the last strong place to invest, but it's certainly at risk of the global story starting to catch up with America. So that's why we don't want to just ride without the put option below our SPY. So let's go over a few reminders. We have a live Q&A webinar for our paid members today at 1 Eastern, so that's coming up soon. Replay will go out to the paid folks. And this is a little more advanced. We really talk shop versus what to expect when you join the program. Tomorrow is our freebie webinar. This is for people on a free trial or on an expired trial. So keep a lookout for all the emails coming to your inbox from Zoom. That's our webinar platform. So very good. We've had a lot of people showing up on both webinars, and I hope to meet and talk with anyone interested in the next 2 days. Trade schedule, again, is the SPY ETF is traded Monday, Wednesday, Friday at noon Eastern. Because we have added the put option below the underlying asset, we will never have emergency alerts. That makes our program extremely easy to follow and relatively passive. It's a 5-minute trade Monday, Wednesday, Friday, and it comes out right at noon Eastern. Sometimes a few minutes early, a few minutes late, but we aim to get it created and delivered in a very short time frame exactly at those points. Tuesday is the alternative to the SPY. So if you don't want to trade 3 days a week, you can certainly just do the Tuesday trade where we're currently focusing on Apple with the caller trade. So we're selling the covered call above the trading price, buying the put below, and then we're taking part of that potential profit and doing a bull call spread on silver. So that's going to help us jazz up the returns. This is something I believe we can do for the next 12 to 24 months, as I believe we will be in a relatively long period of easing the monetary policy, buying up government debt, inflating the monetary supply. So this should be very bullish for silver, gold, and cryptocurrencies. Now Thursday, we're doing the TLT play. I highly endorse having 45% of your portfolio following the TLT trade, 45% either following the SPY or the Apple, and then 10% holding our basket of buy and hold precious metals and cryptocurrencies. So In the webinars, I'll go over all this in a lot more detail, but that's really your overview of how to allocate your capital and really balance yourself out. So if equities go down, bonds usually go up. Bonds go down, equities go up. In general, they're going up together, especially in a phase of lowering interest rates, printing out money to buy bonds. This is an environment where all these risk assets can really rise together. So that's the plan. If you have any questions at all, call Victor for immediate help at 505-203-0396. If I were you, I'd add him in your phone book right now, Victor as the first name, and put Portfolio Builder for the last name. And then anytime you need our help, you can just ring that and have it on speed dial. So thanks again for your time. Again, tomorrow we'll be trading the bond market. We have a webinar today, a webinar tomorrow. This trade alert will be closed out Friday and then issue a new trade to generate some profits over the weekend. So thanks again for your time, and I look forward to getting you more content later today.